Oliver Sloup is with Blue Line Futures in Chicago, and he is reporting directly from the edge of the trading floor today. And Oliver, behind you there, what are the traders talking about when it comes to this livestock market here this week?
Well, we saw a nice start to this session, but coming off those highs, we poked our head above resistance, which is contract highs for both the live cattle and feeder cattle. We're going to move our focus out to December now that the October is closely approaching first notice day. The volume is going to be in December, so we got out above the recent highs, and 120 I think is going to be psychologically significant resistance. There's not a whole lot to go off of in terms of real technical resistance because we are in uncharted territory. So I think 120 is that psychologically significant level. If we cannot achieve, follow through momentum after the open and end up closing on the low end of today's range, I think that perhaps could encourage some long liquidation from the funds who have been establishing a relatively decent sized net long position over the past several weeks. Friday's commitment to traders report showed that the funds actually bought another 4,000 contracts, put them net long about 75,000 contracts. So line in the sand for support 118. If we see a close below that here in the first half of the week, we wouldn't be surprised to see that encourage maybe a little bit more pressure, but ultimately the chart remains friendly. We've been making higher highs and higher lows, so pullbacks will be buying opportunities in our mind.
Well, we opened strong in the cattle futures, but boy, they kind of flamed out here in the last half hour of trade. Let's go check it out. On the live cattle board, let's take a look first of all at October. We had been higher, up as high as 114.35. Now we're down at 113.35. That's down a dime on the day. December now down 37 at 118.48. That's about $1.30 off its earlier high. Let's take a look at February, down a nickel. Feeder cattle trade, right now you have your October contract down 16 cents at 158.02, and all the deferreds are just barely higher. November up a nickel yet at 158.10, January up 17. And if you look at the lean hog trade, now the nearby October contract is still very strong, up $1.72 at 63.90. You have your December 88 higher at 58.80. When you look at the technical chart on hogs, how strong are they right now?
Very strong, very strong. We're looking at December. That's where a lot of the volume's going to be. We're trading out above the 200-day moving average for the first time for this specific contract's life, which is very encouraging. We need to see some follow-through momentum through the first half of the week to really encourage more buyers and new buyers to step back in. If we aren't able to see that follow-through momentum and end up giving back a little bit, maybe that encourages a little bit more long liquidation. But as we mentioned with the live cattle, I think pullbacks will ultimately be a buying opportunity. Key technical support for this December contract comes in right around 58.
On the pork carcass cutout values announced Friday afternoon by USDA, I saw where the carcass values were lower by about 43 cents. The belly market was about 19 cents higher. However, you look at the plant-delivered hogs on Friday, and those prices were all lower. I haven't seen that for quite a while. It looks like things have kind of settled down a little bit there.
Yeah, cash has been really firm over the past couple of weeks, but softened up a little bit. But looking at the futures board, it looks like traders and other market participants remain relatively optimistic. So as we always say, the trend is your friend, and right now the path of least resistance is just a little bit higher.
Okay, thanks for talking with us, Oliver. Always a pleasure. Oliver Sloup of Blue Line Futures in Chicago, right at the edge of the trading floor.